Are you looking for the top dividend ETFs for yield? In our journey through the realm of finances, we often find ourselves seeking avenues that offer the best returns. High dividend yield exchange-traded funds, or ETFs, present one such lucrative path. These financial instruments are a popular choice among enthusiasts, thanks to their potential for providing steady income and capital appreciation. In today's discussion, we'll delve into the intricacies of 7 such high dividend yield ETFs. These include the Vanguard High Dividend Yield ETF, Schwab US Dividend Equity ETF, SPDR Portfolio S and P 500 High Dividend ETF, iShares Core Dividend Growth ETF, WisdomTree US Quality Dividend Growth Fund, ProShares S&P 500 Dividend Aristocrats ETF, and the First Trust Value Line Dividend Index Fund. Each of these has its unique features, advantages, and considerations. Stay tuned to learn more about these ETFs and how they stack up against each other. First on our list is the Vanguard High Dividend Yield ETF. This particular exchange-traded fund is a favorite among many investors, and for good reason. It's known for its impressive dividend yield, which consistently outperforms the market average. This is primarily because the Vanguard High Dividend Yield ETF focuses on high-yielding, US-based companies. Now, let's talk about its holdings. The ETF is comprised of a diverse mix of large-cap value stocks spanning across various sectors. It's heavily weighted towards financials, healthcare, and consumer services, which generally have a track record of high dividends. This is a key strength, as it provides investors with a broad exposure to a range of industries, thus helping mitigate the risk. When it comes to growth, the Vanguard High Dividend Yield ETF has shown a steady performance over the years. However, it's important to bear in mind that this ETF prioritizes income over capital appreciation. So, while you may not see skyrocketing growth figures, the ETF's high dividend yield can provide a steady income stream, which can be particularly appealing in volatile market conditions. But like any investment, it's not without its potential downsides. The focus on high dividend yielding companies means that the ETF may lag behind in terms of growth when compared to funds that concentrate on growth stocks. Also, the ETF could be sensitive to interest rate changes, particularly if rates rise sharply. So there you have it. This ETF is a solid choice for those seeking a high dividend yield. It offers a nice blend of income and diversification, making it a strong contender in the world of dividend ETFs. Now, let's compare these ETFs side by side. To begin, let's take a look at the Vanguard High Dividend Yield ETF. This ETF is known for its consistent and high dividend yield, which can be especially appealing to income-focused investors. However, the trade-off here is that its holdings may not be as robust or as diverse compared to some of the other ETFs in our lineup. Next up is the Schwab US Dividend Equity ETF. This ETF distinguishes itself with its focus on US companies that have a track record of paying out consistent dividends. It's a solid choice for those wanting to invest domestically, but keep in mind that it lacks the global diversification that some other ETFs offer. Then we have the SPDR Portfolio S and P 500 High Dividend ETF. This ETF stands out for its focus on S and P 500 companies with the highest dividend yield. This means it's primarily composed of established, well-known companies. However, this concentration can also mean less exposure to emerging markets and smaller companies. The iShares Core Dividend Growth ETF is our next ETF. This one targets companies that not only pay dividends, but are also expected to grow their dividends over time. This can lead to potential capital appreciation in addition to income. But as with any growth-oriented investment, there's a level of risk involved. Up next is the WisdomTree US Quality Dividend Growth Fund. This ETF takes a slightly different approach by focusing on US companies with high long-term earnings growth potential that also pay dividends. This blend of growth and income can be appealing, but it's worth noting that the focus on quality means it might overlook some high-yield opportunities. The ProShares S&P 500 Dividend Aristocrats ETF is another interesting option. It focuses on companies in the S&P 500 that have increased their dividends for at least 25 consecutive years, hence the term Dividend Aristocrats. This ETF offers an intriguing blend of stability and income, but its strict criteria can limit the number of holdings. Finally, we have the First Trust Value Line Dividend Index Fund. This ETF uses a unique methodology to select companies that not only pay dividends, but also have the potential for capital appreciation. This can provide a balanced approach to income and growth. but the unique selection process might not align with every investor's strategy. So there you have it. From the Vanguard High Dividend Yield ETF's focus on high-yield dividends to the First Trust Value Line Dividend Index Fund's blend of income and growth, each of these ETFs offers something different. Of course, it's important to remember that higher dividend yields aren't always better. Sometimes a high yield can be a sign of a struggling company, and the higher the yield, the higher the risk. Also, keep in mind that some ETFs might prioritize dividends over growth, which could limit capital appreciation potential. And finally, remember that the holdings of these ETFs can vary significantly. Some ETFs focus on large, well-established companies, while others might include smaller, lesser-known companies. This can impact the ETF's risk level, potential returns, and overall diversification. As you can see, each ETF has its own unique strengths and weaknesses. Before you make a decision, it's essential to consider the risks and other factors. When it comes to investing in high dividend yield ETFs, there are certain considerations to keep in mind. Firstly, it's important to remember that past performance is not an indicator of future returns. Just because an ETF has been paying high dividends doesn't guarantee it will continue to do so. Market conditions, company performance, and economic factors can all impact dividend payouts. Secondly, there's the trade-off between high dividend yield and growth potential. High dividend yield ETFs can provide a steady income stream, but they may not offer the same level of capital appreciation as growth-oriented ETFs. In other words, the stocks in these ETFs might not increase in value as much as those in other funds. Another consideration is the risk of dividend cuts. Companies can reduce or eliminate their dividends at any time for a variety of reasons, like financial difficulties or a change in business strategy. When this happens, not only does your income from dividends decrease, but the ETF's share price may also fall as investors sell off their shares. Also, keep in mind that high dividend yield ETFs often focus on specific sectors, like utilities or real estate. This concentration can expose you to sector-specific risks. For instance, real estate ETFs might suffer if there's a downturn in the housing market, while utilities ETFs could be impacted by changes in energy prices or regulations. Lastly, don't overlook the impact of fees. While ETFs generally have lower expense ratios than mutual funds, they're not free. High fees can eat into your dividend income and overall returns. When you're deciding which ETF to invest in, consider your financial goals, risk tolerance, and investment horizon. Do you need regular income now, or are you investing for long-term growth? Are you comfortable with the risks associated with high dividend yield ETFs, or would you prefer a more conservative investment? Keep these factors in mind as you consider which ETF is the best fit for your investment strategy. Remember, investing is not a one-size-fits-all endeavor. It's about finding the right balance for you. Now that we've covered the top dividend ETFs for yield, it's time to make an informed decision. Throughout this video, we've delved deep into the world of dividend ETFs. We've explored the Vanguard High Dividend Yield ETF, known for its impressive dividend yield and strong reputation. We've compared it to other top contenders such as the Schwab US Dividend Equity ETF and the Spider Portfolio S&P 500 High Dividend ETF, both of which have their unique strengths and offerings. Then there's the iShares Core Dividend Growth ETF, WisdomTree US Quality Dividend Growth Fund, ProShares S&P 500 Dividend Aristocrats ETF, and First Trust Value Line Dividend Index Fund. Each of these funds has shown a robust dividend yield, coupled with a diverse range of holdings and potential for growth. But it's vital to keep in mind that a higher dividend yield doesn't always equate to the best choice. Sometimes, the holdings may not be as high quality, or the ETF may have less growth compared to others that don't offer dividends. That's why it's essential to consider each ETF's dividend yield, holdings, and growth prospects, and also to keep in mind the potential risks. Whether you're a seasoned investor or just starting out, the key is to align your investment choices with your financial goals and risk tolerance. Every ETF has its unique benefits and risks, and understanding these is crucial to making an informed decision. Remember, the best dividend ETF for you depends on your individual financial goals and risk tolerance. Happy investing!